back to the Ben and Al show. I'm your host, Ben, and I have my co-host Al here on the line. Today we'll be talking about a little bit about the market, some recent events, and how me and Ben have been kind of navigating the markets because obviously we've seen a little bit of change of pace past couple of weeks. Obviously, ever since I went on vacation and we had the last podcast here, we've had some developments in the broader markets. Some some fake outs with small caps. That's one that we kind of covered last week, and we were kind of nailing that one home. That we were looking at that area for the breakout. We got the breakout. Now we're kind of pulling back, and it looks like we are seeing a little bit of weakness still there. Um, at least from what we can see for now, right? We could see price hold and then kind of start pushing out again. But for now, we have a lot of weakness and growth. Um, and I don't know about you guys, but for me, this is not the trading environment that I really like to trade in. So what I've been doing at least, and it's at least a tip from someone who's been in the markets for a good amount of time. It's not something you have to do, but it's something that I like to implement myself. Just take a little bit of risk off, right? Make sure that you're securing profits for the month. Especially again, we're going into the holiday season, so hopefully everyone is having a great holiday whenever this is going to be uploaded. Um, but yeah, just take off size, mess around with lottos, right? Only with profits, right? And a small portion of profits. You want to protect those, and yeah, that's what I've been doing. What about you, Ben?
Yeah, same thing. I'm a big swing trader, but as of right now, pretty much, unless it's like just an overnight position, doing no swing trading. I think I'm in zero swings. Actually, I'm in one. I'm in four still, but really lately, my strategy to kind of avoid the market condition is trade just the first hour and a half. Um, as you know, we get the big pop in the morning on certain names, but you can't hold it for the entire day because they do sell-offs. And so you can get that nice pop in the morning and then you can just be done for the day, right? So that's kind of what I've been doing. I've been just doing that to avoid this intraday chop. And it's what we're seeing. We're seeing a lot of fake outs. Normally I'm a big person on kind of front running breakouts. I like to get in right before the move is anticipated to happen. You can't do that right now. So we're seeing a lot of that move. It'll pop and then it'll just drop right back down. So you
Yeah,
can't do that right now. So go ahead. What were you about to say?
no, and I agree. I'm kind of the same way in the way I like to trade. So yeah, keeping it safe and not really trying to front run anything and not adding too much size onto my trades. But another thing I wanted to cover is we do have the market making new highs, at least the indexes. So we have the Qs just made a new high yesterday, which was Monday the 22nd, and also SPY making a new high on Monday the 22nd. But an interesting development is we have most of the names in the Nasdaq making new lows, at least new 52-week lows. So while the market continues to push higher, especially some tech and growth names, we are seeing a lot of names still show a lot of weakness. And this is something I like to talk about and make sure everyone kind of understands. Tweet about this a couple times, but there are market cycles, and you never want to get caught in um, a market cycle either to the upside or the downside, right? You don't want to be caught when something doesn't go your way. So there's too many people that are kind of caught up in some names that aren't really showing any recovery and they're trying to time bottoms and whatnot. Um, Not the way to go about it, in my opinion, if you are a trader. It is obviously different if you see value in the company and you are kind of distinguishing the fact that you're looking at a ticker compared to looking at a company. And that's kind of a common misconception. So obviously, if you find value in the company, you can buy the company. That's fine. But I'm talking about just kind of in the terms of trading, especially options trading, since we're kind of limited with how much time we have to kind of hold something and let it kind of play out and let our kind of plan marinate, I guess you can say. So just make sure everyone understands that we do have market cycles, and we will see some names not kind of revisit their highs, I guess, for a while, right? It could be never, it could be a couple years, and too many people are kind of trying to time that, especially for trading. Um, some names that aren't really ready to move yet. And I guess some tips that I can give everyone to kind of understand when something might bottom out is before looking for any trend reversal, what you're usually going to see is a little bit of accumulation on the name, right? So that's obviously kind of speaking from the fact if you have a downtrend and you're looking for a reversal to the upside, you will see some accumulation. So basically what that means is you have big buys kind of buying up the lows and building a nice level that they can add onto their position for. So you can kind of see that looking at volume, right? If you see where you have strong green days on big volume, that's usually someone accumulating some size. Usually, obviously, institutions, funds, any kind of big players. So we're looking for a lot of volume on those days, and we're looking for a base to kind of build. So bases will always kind of shift trends. Obviously, we know we have distribution the other way when something is looking to kind of shift trends from an uptrend to a downtrend. You look for distribution volume. So it's kind of the same idea, just just vice versa. So we're looking for the pops at the highs to kind of get sold off. A lot of volume on those red days. Obviously, kind of telling us that we have someone either building a short position or letting go of their big position that they kind of had already, right? And when I mean someone, again, I'm talking about a big player. So yeah, you're always looking for that kind of base either way from the highs or the lows for that reversal. And then you're just looking for either the EMAs to reclaim, right? Or for the for price to lose the EMAs, right? So again, if that's from the if you're looking for the uptrend to break, you're looking for the daily moving averages to break, especially if you were kind of an avid swing trader and you do like to use and implement EMAs. Great for kind of telling you the trend. So you can use that same idea, vice versa, from the lows if you're looking for an uptrend to begin. You're just looking for the EMAs to reclaim a new active sequence. And you're just looking for a new higher low, right? So there's no reason to try to time the bottom. Wait for those kind of signals. Obviously, there's a lot more things you can use as well. Those are just kind of the tips that I can give you from what I like to use and from what I've learned. But a lot of great traders will tell you the same thing, in my opinion, at least. So, well, what do you think about that?
Yeah, I think you're exactly right. We see a lot right now is a lot of people see names that are beaten down, and just because they're beaten down, they think, it can't go any further, right? Well, it can, and just because they were strong the last quarter, doesn't mean they're going to be just regain strength and be strong this quarter. So that's like a big misconception. Just because something is 50%, 60% down from its highs last quarter, doesn't mean like it's just gonna stop right there. Like you said, wait for those areas of accumulation. You can use volume by price, use the volume shelves to really you will see those areas of accumulation really start to build up over time. If you're an equity trader, those are a good place to build up your position as well. Um, build it up while like you said, the institution or the funds is just the big money's building up theirs. So you can build up your position in those areas as well. But yeah, just as this isn't the environment that you really want to time the bottom on these growth names that are getting, smacked down from their highs. Some of them have quite a ways that they look like they could still go, and some of them haven't even started yet, and they're still looking kind of strong. But I think it's going to be the cycle that most of these growth names are really going to go through. And it is what it is. Like you said, it's just the cycle of the market. You go back and look at any mega cap that's been on the market for 10, 15, 20 years, right? You can see they went through the same thing.
Yeah.
It's just the cycle of the market. It is what it is. I mean, zoom out a little bit, don't panic. Just don't jump into everything just because it's beaten down. It's gonna probably it definitely go down more. Things can always go down more,
Yeah.
right? So there's no sense in trying to catch that big red candle that's still gonna be going down the next day.
Yeah, and to kind of add on top of that, not sure if anyone has read some Jesse Livermore, um, but there are some great Jesse Livermore books. I mean, at least two of them that I know of. The main one that I think everyone should give a read into is How to Trade in Stocks. It really just kind of gives you an idea to, for example, I've had many people telling me about some stocks that are down 80%, 70% from the highs, and they're telling me, "Oh, this is something that you need to look to trade because it has so much upside potential since it's 70% off the highs." But those are the names I always want to stay away from. I want to kind of look at names making new highs and kind of showing strength, right? Obviously, you don't want to buy tops, but um, any strong name making new highs and kind of trending is what I like to look at. And again, obviously, everyone's strategy is different. You always want to find out something that works for you. But that is a great read to give, in my opinion. It can really help you on some discipline and patience as well.
Yeah, I completely agree. I'd much rather see what money's going into. That's why, I know you do it as well. You kind of see before the day gets started, where the money's been going for the last day or two, what's strong when the market's not. For example, recently, financial sector has been strong, in going against the trend of the market. So obviously, that's where I want to put my money as well. Just like you said, just because it has had upside in the past and it's now beat down doesn't mean it's just automatically gonna start seeing that upside once again.
Yeah, exactly. So just have to ride trends, in my opinion. Again, this is all just our opinion, not financial advice. This is how we like to trade. Me and Ben kind of have a similar trading style. I'm sure most of the people watching the show probably relate to it in some way. If you do not, then that's fine. Again, no, we're not trying to force you to trade the way we do. It's just if you relate to it. If not, everyone has their own strategy. Whatever works for you works for you. But is there anything you want to leave us off on? I think we covered most of the things. Market does look a little bit weak into the holiday season, but we'll see. We're kind of testing. It looks like some of the major EMA levels, SPYs kind of trying to hold on to the 8 day. Not really for me any predictions to make just yet. It just looks like kind of ranging at the top side. So we'll have to see if we can hold on to some key levels. The 21 EMA looks to be the area that SPY is kind of holding right now. So as long as it can hold that, probably going to see new highs. If we can't, we'll probably come down to test the 50, which makes sense. But yeah, anything you want to leave us off on?
Yeah. When markets at all-time highs, we see this all the time. Just because we see the market at all-time highs doesn't mean, everything follows with it. Obviously, we see a few big names holding that up, so we'll start to see money flowing out of those, and just see where that, because we saw it today. We saw money flowing out of those big names that were holding, the indexes up, and try to see where that money is going to. But when you're undecisive on where you think money is going or what do you think is going with or against the trend, this and that. It's never bad to just not trade, right? I try to stress that all the time. Just because you have money in your portfolio does not mean it has to be used. So, especially
Yep.
your trading portfolio, that should not have to have a trade going on 24/7. You don't always have to have a position open.
Yep.
Um, Once you start feeling like you always have to have a position open, you're just rushing into things. You're forcing trends. You're forcing trades. It's just not going to end well. You're just going to lose the money in the long run.
Yep.
So
That's true.
cash
And
is
what I
always a
always,
position, is what I'm trying to say, really.
yeah, yeah, 100% right. And what I always tell people is if you're really itching for a trade, just go gamble some money in the casino or something instead.
Exactly.
No, I'm
Exactly.
kidding. I'm kidding. I'm not endorsing gambling. It was a joke. It's a joke.
Oh, okay. Yeah,
Don't,
sure.
yeah, 100% a joke. So yeah, no need to trade every single day. 252 trading days. Make the most out of them. Don't force anything.
All right. If you want to lose money,
That's
you
what
can
we,
bet him on the Steelers, right?
yeah, on
Oh,
this.
sorry. I'm sorry. That's my team.
Yeah, unfortunate. All right, yeah, we'll leave you guys off with that. Hopefully everyone enjoys their holidays. And we'll catch you guys on the next episode. Thanks for tuning in.